The central banks have decided within the last 6 months to raise rates and really put an end to a 40-year bull market in the bond market. On the macro side, this is the first time Bitcoin has faced a rising interest rate environment, which causes on the macro side a huge shift in the funds.
American broadcaster and former host of the Keiser Report, Max Keiser, has explained that there is a noticeable difference between the recent Bitcoin crash and previous ones. Keiser has owned Bitcoin since 2011 when he first invested in the asset class at $1 per coin. Since then, he has experienced multiple 80% drawdowns. According to Keiser, one noticeable difference between this crash, which is still at a 70% drawdown, and previous, more severe ones, is the high inflation rate in the United States. Keiser notes that the high inflation, increasing interest rates, and the threat of recession have caused a massive shift in the attitude of investors in the United States. Keiser also notes that the asset class is maturing, especially with the influx of investors like Michael Saylor and other multi-billion-dollar corporations. As a result, he explains that certain questionable practices that were previously seen as the norm in the crypto market are now gradually coming to an end. The result of all these, according to Keiser, is this 70% drawdown from Bitcoin's all-time high. Please watch this video to the end, as the Bitcoin OG also talks about a shift in the global economy facilitated by the Russia-Ukraine war. Also, remember to share and like this video and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm, so we can keep bringing you these videos. Thanks and enjoy.
I think in the past there was a definite lack of liquidity going on. So, Mt. Gox was the only exchange around, and it was incredibly buggy and wasn't suitable for making markets. And so when it started to blow up, you had a pretty predictable fall in the price. Other exchanges that were dominant, like BitMEX and others, were run without much thought to concern about hewing to regulatory guidelines, let's say. I think when Saylor first started buying Bitcoin, he made the comment that maybe 50 million a day in volume was actual Bitcoin. The rest was wash trading. Bitcoin has had a wash trading problem for years. Exchanges trading their own accounts to create stimulated volume. You see that in the NASDAQ market all the time. NASDAQ is a network of dealers, right? It's not like the New York Stock Exchange where you have a specialist at this post making a market. You have a network. And that NASDAQ is for years guilty of wash trading amongst themselves to create the painting the tape and all these other techniques to create the illusion of volume and to manufacture prices. And Bitcoin had this problem for years. And so when the sentiment changed, you would have an 80% drawdown because there's just no volume. There was no volume. Now, what's different here is that over the past, let's call it the Michael Saylor era of the past several years, the volume has become legitimate and the demand is legitimate. And so the markets are legitimate. But the issue here would be the layering on top of this market of these derivatives or DeFi and cross-collateralization. So that's created an obstacle for good price discovery. So that would be the difference. But the net effect is the same. People always, of course, ask me and ask you and ask others for price predictions. And it's an incredibly volatile asset. So it really is incredibly difficult to make a price direction other than to say that what I've been saying for 11 years, I'll tell you the direction of Bitcoin. It's up. If you hold it for maybe 3.5 years, anyone who's held it for 3.5 years or 4 years is in the black, right? So if you've got a time frame which is not a long time frame, 3.5, 4 years, you're going to be in the black. But I think that would be the main difference, is that also, in this environment, when I was at the Bitcoin Miami 22, the conference, the difference between that conference and, let's say, a conference from 10 years ago was the quality of the suits, right? So the people on stage are wearing, $3,000 suits. Back 11 years ago, 10 years ago, people would show up in torn T-shirts and they were coders and, rarely came out of their basement. But it's the same kind of struggle to come to terms with this emerging asset class. And in a lot of ways, it's the same. You just have a higher grade of speculator. You have, of course, The amount of money that's been flooding the system has increased every year for many years now. I mean, we got to, the central banks have decided within the last 6 months to raise rates and really put an end to a 40-year bull market in the bond market. So on the macro side, this is the first time Bitcoin has faced a rising interest rate environment, which causes on the macro side a huge shift in the funds. You see, for example, something like the Russian ruble is the strongest performing currency in the world in 2022 because it's commodity based. I think starting in February with the Russia-Ukraine conflict, we saw the end of a 40-year bull market in bonds and financialization and the beginning of a secular inflationary move in global markets that'll be tied to commodities. You know, commodities were not a big factor for 40 years. It was financialization, interest rates, extend and pretend, just create more bonds, lower, you know, the coupon rate, extend the maturity. That's the way the world worked for 40 years.
IRA allow you to save for retirement in a tax-advantaged way for greater financial security with lots of tax advantages. But most IRA offer the same boring stocks and bonds. Introducing iTrust Capital, the #1 crypto IRA platform in America. iTrust Capital allows cryptocurrency investors like you to enjoy all the exciting benefits of tax-advantaged retirement accounts. It combines the traditional IRA with the new, exciting world of cryptocurrencies. Why should you use iTrust Capital? It is the best crypto retirement platform in America, with some of the lowest fees of any cryptocurrency IRA platform. It gives investors adequate exposure to some of the top cryptocurrencies like Bitcoin, Ethereum, Cardano, Solana, and Polkadot. You can buy and sell all your favorite crypto assets while enjoying amazing tax-free gains. It is adequately secured by Coinbase custody with a $320 million insurance to protect against theft. You can easily roll over an existing retirement account or begin a new one when you register on iTrust Capital. iTrust Capital is the trusted crypto IRA for many American investors who love the crypto industry. To join the millions of Americans who use the platform, please click on the link in the description box below.
Now we're in a new world where suddenly the price of stuff like energy and food, it cannot be hidden anymore. It's actually hitting people's bottom line, and that's not going to change anytime soon. That's a secular shift in the inflation, in the economy, in the globe that's going to be with us for years, not a few months. And so that's something that is new for Bitcoin. And ultimately, it's going to do well in that environment because as people begin to understand that the financialized world is crumbling, having a, you know, I often say Bitcoin is a risk-off investment. It's not a risk on, it's a risk off. This is where you put your safe haven cash. It's hard to make that case with the volatility the way it is, but when you have something for all the other reasons, it's unconfiscatable, uncensorable, immutable, you know, it makes sense. And it makes a lot of sense for 1 billion or 2 billion people out there that have been unbanked. That's where the growth's going to come. That's where the adoption's happening. So those are the changes, some differences, some similarities.
Max Keiser explains we have entered a secular inflationary period in the global market that will be tied to commodities. Most notably, he believes this would be an extended period that could last for several years, essentially rewriting market behaviors that have existed for over 40 years. This means that during the next few months, we will be seeing a lot of repositioning as investors try to decide how their portfolio, time horizon, and interest fit into this new, unfamiliar world. And this is where the good news comes in for Bitcoin investors. Keiser believes a lot of that repositioning will be more investors moving toward Bitcoin to protect themselves against the volatile macro environment. What do you think about Keiser's assertion that Bitcoin is a risk-off and safe haven asset despite the crash? Please drop your thoughts in the comment section. Let's get back to Max Keiser's interview. The American broadcaster also weighs in on the possibility of the U.S. Federal Reserve being able to lower inflation without plunging the economy into a nasty recession. Here's what Max Keiser has to say about that.
You know, it's, as I said, I think this is a kind of a follow-up to what we were just saying there. So the Fed is still thinking like the world is similar to the way it's been for 40 years. You know, starting with Greenspan, you had the so-called Greenspan put. You know, every time markets came down, Greenspan would flood the market with more cash or lower interest rates. And that went through Bernanke, Janet Yellen, Jay Powell. The activist Fed, the model has been with us for 40 years. and that there's no problem that can't be solved by money printing. What happened in February 24th with Russia, Ukraine now is that that model is dead. And the price determining factor for prices is shifted from the New York Fed or from the Fed to the East, to Russia, China, Iran, India, Central America, South America, Brazil. Those countries are going to be determining prices going forward. And so the Fed can only operate if the world is on a globalized US dollar standard. But that's no longer the case. On February 26th, 2 days after Russia-Ukraine conflict, the Fed seized like 600 billion, I think, or billion in Russian reserves. So, China looked at that and said, you mean our reserves aren't safe? So that was a huge, self-own, that was one of the stupidest things that anyone could have done. So now we're in a new world. And I just think Jay Powell and these guys and Janet Yellen, they haven't adjusted yet. But, markets are cruel, and the market price ultimately works its way into reality. And that gas price isn't going down. We're talking $10, $11, $12, $15 a gallon for gas in the United States. And that do the math, Pomp. That's a fundamental shift in this standard of living for the United States. That's just a fact, because we don't have the ability to control these markets and prices anymore, because people are dumping the dollar. The dollar is not going to be world reserve currency. And the guys with the actual energy are in control. So how are we going to fight that? And all the rhetoric coming out of the UK and these other countries seems like people are totally tone deaf to this reality. Germany, or let's look at another industry, for example, the ESG industry, the climate change industry, the move toward renewables. Well, that's completely blown out of the water. Germany, which was heading toward 100% renewable, is now going back to coal. Like, all these countries are going back to coal now because of what's happening in the energy markets. And so that's just a total shift. So, I mean, I believe you're a millennial, and Pomp, and, I think of it as being one of the unluckiest generations ever in history. You kind of grew up through 9/11. You've been through the 2008 crisis, the subprime crisis, and now you're going to watch the US dollar lose world reserve currency, Pomp. You guys and your brothers are really you lost the generational lottery. I can say that.
Millennials have indeed missed out on the generational lottery. It is quite unfortunate that they are left to feed off the stories of the glorious times when you didn't have to hold at least 3 jobs to afford a down payment on a decent house. Fortunately, this is one of the changes the crypto space is trying to effect. With such high-performing assets like Bitcoin in their portfolios, millennials can have the same great opportunities as the past generation without having to rob a bank. What do you think about Max Keiser's interview? Please drop your comments and observations in the comments section below. Also, remember to hit the like button, subscribe to the channel, and turn on post notifications for more videos. Thanks for watching.